At exactly 3:47 a.m. on a Tuesday morning, Marcus Chen's phone lit up with a notification that would destroy everything he'd built in 15 years. Perfect 850 credit score, 0 missed payments, $180,000 in available credit, and in 72 hours it would all vanish because of a rule no one ever told him about. But before we get to what happened, you need to understand something the credit system doesn't want you to know. Marcus wasn't special. He was you. He was me, a 34-year-old software engineer who did everything right, paid his student loans early, used only 10% of his credit limit, set up auto pay for everything. He read the articles, followed the advice, played by every rule they taught him. His wallet held 5 credit cards, perfectly managed: Chase Sapphire Reserve, American Express Platinum, Capital One, each one a testament to his financial discipline. His credit report? Flawless, not a single late payment in 15 years. "I thought I was invincible," Marcus told me 6 months later, his voice still carrying that edge of disbelief. "I thought credit scores were simple. Be responsible and you're protected." He was wrong. The notification that night wasn't from just any bank. 3 months earlier, Marcus had made a decision that seemed perfectly logical. His company was sending him to Singapore for a year-long project. Excited about the opportunity, he did what any responsible person would do. He researched everything. International phone plans? Check. Work visa? Check. Apartment lease? Check. Credit cards for international use? Check. "I called all my credit card companies," Marcus explained. "I told them I'd be abroad. I asked if there were any issues. Every single one said, 'No problem, enjoy your trip.'" What they didn't tell him was the trap he just walked into. Because buried in the fine print of every credit agreement is a rule so devastating it can erase your financial identity overnight. And Marcus was about to discover it the hard way. The first 2 months in Singapore were perfect. Marcus used his credit cards like he always did: groceries at the local market, dinners with colleagues, a gym membership. His auto pay system handled everything back home. Then in month 3, something strange happened. He tried to buy a new laptop at an electronics store. His American Express declined. Confused, he tried his Chase card. Declined. Capital One? Declined. "I checked my phone immediately," Marcus said. "I thought maybe there was fraud, but my credit monitoring app showed everything was fine. Perfect score, all accounts current." He called American Express from the store, standing awkwardly while other customers moved past him. The representative put him on hold. 5 minutes, 10 minutes, 15. When she came back, her voice had changed.
"Mr. Chen, I'm seeing some unusual activity on your account." "Unusual? I'm just traveling for work. I notified you months ago." "Yes, I see that note. But sir, your spending patterns have triggered our risk assessment algorithm." Marcus felt his stomach tighten. "What does that mean?" "It means we're going to need to place a temporary hold on your account while we investigate." "Investigate what? I haven't done anything wrong." "I understand your frustration, sir. This is standard procedure for accounts showing extended foreign activity." But it wasn't standard. It was calculated. What Marcus didn't know was that 3 other credit card companies had received the exact same algorithmic flag that night, and they were all making the same decision. Within 24 hours, all 5 of Marcus's credit cards were frozen. Not closed, frozen, a crucial distinction he wouldn't understand until later. He called each company. Each one gave him a different excuse. Chase said they needed additional documentation to verify his identity. Capital One said his account was under security review. Discover claimed they were seeing unusual patterns that require investigation. Bank of America called it a routine fraud prevention measure. "Routine?" Marcus laughed bitterly when he told me this. "There was nothing routine about it. They coordinated this." He spent the next 3 days gathering documents. Copies of his passport, his work visa, his company letter, his apartment lease in Singapore, his utility bills from both countries, bank statements, tax returns. He scanned everything, uploaded everything, called every department. But here's what broke him. His rent payment bounced. His auto-pay system, which had worked flawlessly for years, failed. Not because he didn't have money, his checking account had $45,000, but because the bank flagged the international transaction pattern and froze his account for his protection. His landlord in San Francisco sent an eviction warning, his car payment bounced, his insurance lapsed, and his credit score still showed 850. That's when Marcus discovered the most terrifying truth about the credit system. Credit scores are a lie. Not in the sense that they're calculated wrong, but in what they actually measure. Your credit score shows you're reliable, a credit attorney later explained to Marcus. But it doesn't protect you from the credit system deciding you're a risk. Here's the rule no one talks about. Extended foreign residence, even with perfect payment history, allows credit companies to classify you as high risk and freeze your accounts without warning. It's in the terms of service, page 47, section 12, subsection D, the part no one reads. They have the right to freeze your account for any risk assessment, the attorney continued. And living abroad is considered risk, even if you're paying, even if you're perfect, even if you told them in advance. But the worst part? When they freeze your accounts, they still report to the credit bureaus.
Marcus didn't know this, but frozen accounts with pending charges create a cascade effect. In the first 24 hours, cards freeze, and you think it's temporary. Between hour 25 and 48, autopay fails and late payment warnings start. Between hour 49 and 72, late payments report to credit bureaus and your score drops. Marcus's 850 score dropped to 620 in 72 hours. Not because he missed payments, he had the money, but because the system froze him out, then penalized him for being frozen. I felt like I was going insane, Marcus said. I was screaming at customer service reps. I was crying to my girlfriend on video calls. I couldn't sleep. I couldn't eat. Everything I'd built, just gone. His company needed him to sign a new apartment lease in Singapore. Denied. Credit too low. His car loan came up for refinance. Denied. Score dropped too fast. His credit card applications to replace the frozen ones? Denied. Too many recent freezes. And then Marcus discovered something even darker about the system. To unfreeze his accounts, Marcus needed to prove he wasn't a risk. But how do you prove you're not a risk when the system has already labeled you one? Each credit company wanted different documents. Chase wanted proof of permanent U.S. residence, which he didn't have because he was in Singapore for work. American Express wanted 3 months of utility bills from his U.S. address, which he'd sublet. Capital One wanted him to visit a branch in person. Impossible from Singapore. It was designed to fail, Marcus realized. They set up requirements they knew I couldn't meet. Meanwhile, the late payment marks kept stacking. His frozen accounts couldn't process the autopay, so every month added another black mark. Month 1, 7 late payments reported. Month 2, 14 late payments reported. Month 3, 21 late payments reported. His score dropped to 580, then 540, then 490. I sat in my Singapore apartment at 2 a.m., Marcus told me, his voice cracking slightly even months later. I had $45,000 in my checking account. I had a 6-figure job. I had done everything right, and I couldn't even rent an apartment. He looked at his phone, at the credit monitoring app still mockingly showing alerts about his declining score. For the first time in my life, I understood how people give up on the system entirely. But then, in month 4, Marcus stumbled onto something that changed everything. A Reddit post. Buried in a credit repair forum, someone had shared a story eerily similar to Marcus's. Frozen accounts, perfect payment history, score destruction. But there was a difference. This person had fought back and won. The secret? A little-known law called the Fair Credit Reporting Act, Section 623. The law states, if a creditor reports information they know is inaccurate or incomplete, they're liable. Marcus's frozen accounts were reporting late payments when the truth was account frozen by creditor. Those are very different things. I spent 3 days reading the law. Then I wrote letters to every credit bureau and every credit card company. The letters said one thing: you froze my account without cause, then reported me as late when I couldn't pay through the frozen account. This is inaccurate reporting under FCRA Section 623. Remove all late payment marks or face legal action. And here's what no one tells you about the credit system. When you threaten legal action with specific statute citations, they listen. Within 2 weeks, American Express unfroze his account and removed the late marks. Chase removed the late marks and issued an apology. Capital One closed his account but agreed to remove all negative reporting. His score jumped from 490 to 720 in 1 month. But Marcus wasn't done. I realized I'd discovered something that affects millions of people, he said, so I started documenting everything. He created a spreadsheet of every call, every letter, every representative he spoke with. He recorded, legally, his phone conversations. He saved every email. Then he filed complaints with the Consumer Financial Protection Bureau, the Federal Trade Commission, and his state attorney general. Within 6 months, 2 of the credit card companies settled with him privately. The terms? Confidential. But Marcus's smile when he mentioned it told me everything. His credit score? Back to 825. But something had changed in Marcus. I used to think the credit system was fair, Marcus told me in our final conversation, that if you played by the rules, you'd be protected. But the truth is darker. The credit system has 2 sets of rules. The rules they tell you: pay on time, keep utilization low, don't miss payments. The rules they don't tell you: they can freeze you without cause. They can report you while frozen. They can destroy your score even when you're perfect. They can create catch-22 requirements. They profit from your confusion. But here's the thing, Marcus added, his voice stronger now. Once you know the real rules, you can fight back. He paused. And you can win. Marcus's case isn't unique. Every year, thousands of people with perfect credit are destroyed by system rules they never knew existed. The question is, will you wait until it happens to you? Or will you learn the real rules now?